when there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked it out very quickly. We're going to have a fantastic future together.
Presidents Donald Trump and Xi Jinping signal a relationship reset as the two leaders set a positive tone for the first visit by sitting U.S. President to Beijing in nearly a decade. But beyond the handshake lies a long list of disagreements. Traveling with the U.S. president is a massive delegation that includes top U.S. CEOs to navigate trade and security tensions between the world's two largest economies. Well, this is Horizons Middle East and Africa. It's just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, if you were watching Bloomberg a couple of hours ago, you would have seen the arrival of President Trump, the very highly anticipated meeting between the two presidents, the warm reception that he received alongside the slew of members of the cabinet and those high-level industry CEOs too. So talks have now begun. We are waiting to see whether there are going to be any breakthroughs. And of course, markets are on tenterhooks to see whether indeed we do get any commercial deals over the line. So that's going to be the focus for the next, I would say, at least the 36 hours while these talks are going on. As for markets, you're not seeing a huge impact with the handover from Asia Pacific this morning. We are leaning slightly lower, though at one point, a lot of focus still on that Kospi index, given the hype around AI and tech trades. And of course, that only just accelerated with the announcement yesterday that Jensen Huang was also going to be accompanying President Trump on the trip. So high expectations there that maybe this could also lead to a breakthrough in terms of NVIDIA chip access to China. Something to watch out for there on the tech front. S&P futures trading flat, though, building on all-time highs once again yesterday, record highs for Wall Street. And then 10-year yield, 4.46. Remember, we had inflation numbers yesterday, those wholesale figures, the PPI numbers, showing the biggest jump since 2022. And that is on back of the stronger than expected CPI figures that came through yesterday, or the day before, I should say, the strongest figures since 2023. And there you really are beginning to see the reverberations of the regional war, the impact that has had on inflation and energy costs. And that's beginning to show up not just in CPI, but in wholesale figures as well. So very notable, and one of the reasons why these yields keep pushing up. And then speaking of energy costs, take a look at Brent this morning, $106. We are up 0.3%. Not a lot to report in terms of geopolitical developments over here. But again, as it pertains to the Iran file, perhaps there is a little bit of hope that maybe the U.S. can bring in China to help mediate or push forward on the diplomacy front. So something to watch out for there. Now, in terms of the chart of the day, I thought this was interesting in that the yuan has been steadily climbing versus the USD, so strengthening versus the USD, I should say, over the course of the last 10, 11 weeks. And it could be construed as somewhat of an olive branch that China are putting forward to the U.S. ahead of that meeting. And remember, Trump has many times commented on the fact that China have been manipulating their currency and keeping the level at a weak, or keeping the yuan at a weak level in order to benefit exports. So what we've seen in the run-up to this summit is a strengthening of the renminbi. All right, let's talk more broadly about how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Joanna, coming into today, expectations running high. There was a lot of optimism for Asia stocks. You're looking at them pairing some of the earlier gains of about 0.8% on the region's benchmark, though. As the summit gets underway, maybe investors choosing to take some profit off the table. You are looking at the Kospi that was 1.8% higher at one point, looking quite flat now. The CSI 300 entered the lunch break in the red, despite some gains earlier. That being said, this is an index that has clocked 5 weeks of gains. Now, we are, of course, watching out for whether this trade truce is extended, and certainly that's the market expectation. And so far, it doesn't look like, based on the headlines, there's anything to really derail this. We are also highlighting here what you're seeing in the Hang Seng because the outperformance relatively is coming through from Alibaba and Tencent. So these Chinese mega caps that had their revenues missing, but they're showing very bullish sentiment on AI profit growth in the future. So that seems to be lifting some of these tech names on the Hang Seng as well. Jumana?
Avril, thank you so much. Avril Hong in Singapore. Well, President Donald Trump is the first sitting U.S. president to visit Beijing in nearly a decade. Chinese President Xi Jinping says the relationship with the U.S. can be dangerous if not handled well. Let's bring in our chief North Asia correspondent, Stephen Engel. So, Stephen, I was watching, and actually it was pretty riveting TV, just watching the arrival of President Trump. And, of course, that initial greeting with President Xi, the opening remarks, very warm, I would say, remarks coming from both of them. And President Trump even saying this could be the greatest summit ever. And he's known for his hyperbole, of course. But maybe beneath all of that, there are a huge number of issues still that need to be resolved between the two sides. How optimistic are we that we're going to see breakthroughs?
Well, based on the tone, you'd think this is going to be the greatest thing that's ever happened to the two countries, obviously. And you just summed up some of the words that came from Donald Trump and also Xi Jinping. They both said the right thing. And that's what these state pageantry is all about in China. It's highly scripted, but I have to say, it looked as though Donald Trump was speaking off the cuff. He did not add a lot of spontaneity to his comments. He essentially said, we got along when there were differences. And believe me, last year with the trade tariff issues and the retaliation by China, there were a lot of differences between the two sides. Then they struck that truce, a temporary truce, a year-long truce in Busan at the end of October, thereabouts. So the goal here was to say the right thing and perhaps extend that truce to a more lasting peace. But also they need to talk about their differences. Xi Jinping, for his part, he said, we should be partners, not rivals. And you just saw those headlines about Taiwan. That is potentially an area of contention, no doubt. Xi Jinping clearly will like to get an idea from Donald Trump where he stands on the latest arms package that's been sort of waiting in Congress for Donald Trump to sign off on. And we'll have to see whether he does go back to D.C. and approve that, whether he scales it back or what. But essentially, Xi Jinping saying Taiwan is the most important issue in U.S. China ties. Yeah. Ties can be stable if Taiwan issue is handled well. If not, ties will be pushed to dangerous territory.
Yeah. Okay. So those are perhaps some of the more challenging issues on the geopolitical front, Stephen. And we haven't even spoken about Iran, which, again, is a massive one to tackle, too. But doesn't the fact that President Trump is accompanied by this huge delegation of American executives and CEOs also indicate that perhaps the focus is going to be more on the commercial side than getting these major achievements on the geopolitical front?
Sure. I think the deliverables are easier on the commercial side, especially when you have the top executives from NVIDIA, from Apple, from Cargill, from Boeing, from Goldman Sachs, from Citibank. They're all here, not to mention Steve Schwartzman and others, who have long history of doing business in China. I think a lot of these business leaders would probably agree that the trade relations sort of got off track because of the geopolitical stresses between the two nations, not to mention the tariff barrage that was launched by Donald Trump almost a year, or a little more than a year ago, obviously in the beginning part of April of last year. Now, that's why they're looking at possibly on the geopolitical front or on the diplomatic front. Jamieson Greer, the U.S. Trade Representative, has talked at length about this so-called Board of Trade and Board of Investment, where it sort of sets the parameters and gives guidelines for areas that the two nations on the commercial side can do business that will not fall under national security. That's what happened in business and commercial relations last year. Everything kind of got lumped into that overhanging pressure of, does this constitute national security? That's why it's most interesting that Jensen Huang is here. We've already gotten Trump administration approval for the H200 chip, which is an advancement of the H20, to be sold on a licensed basis to China. But it's China that has said, we're not ready to buy that. We are going to build out our own indigenous innovation and our own self-reliance. But there could be, because Jensen Huang jumped onto the plane in Anchorage and joined this trip. So that's why the markets have been kind of wagging their tongues about the possibility that there could be some clarity for NVIDIA and chips are some of their most advanced accelerators to China.
Yeah, well, Huang himself describing the meetings going excellent. So let's see what comes out of that.
Yeah.
Stephen Engel, Bloomberg's chief North Asia correspondent, thank you so much. Well, let's go to Washington now and speak to Wyne, senior research and advocacy advisor for U.S. China Relations at the International Crisis Group. You know, I want to just spend a moment talking about the run-up to this summit, because it was supposed to happen a couple of weeks ago, and the reason it didn't was because of the Iran war. I think, probably the President Trump, thought he would have wrapped up the war by then. Clearly, that's not the case. He is under a lot of public pressure in the U.S. right now. Public support for the war is dropping. We've been speaking about inflation costs creeping higher and higher. What would constitute a win for President Trump to take home to the U.S. out of this summit?
Well, I think that we should have modest expectations, despite the hyperbole on President Trump's part, to which you alluded or that you referenced. In terms of what we can realistically expect, and what I hope that the two leaders will commit to, is to coordinate intentionally, regularly, and in good faith to bring about a swift, sustained de-escalation of the crisis in the Middle East, because it's a crisis that disadvantages both countries. It has destabilized energy markets, it has destabilized food markets, it's exacerbating inflationary pressures. And I think that a short-term energy shock, both countries, I think, are reasonably well equipped to deal with. A more protracted energy shock becomes problematic for both countries. So it is a shared interest for both countries to de-escalate. Whether or not China will use the leverage that it has, whether or not China will use the leverage that it thinks it has from this crisis. Because keep in mind, I think even prior to the U.S. war in Iran, I think that President Trump was already entering this meeting with a weaker hand. But the war in Iran has furnished President Xi with many of leverage that he didn't think that he would have.
Yeah, well, you just said that President Trump is coming into this summit with a weaker hand. When indeed the last time President Trump was in Beijing was in 2017. That was the last time a U.S. president paid a visit to China. China as well today is a different China from what it was a decade ago. And in many ways, you could argue more assertive, more aware of some of the leverage that they have on the global economy. And at the same time, perhaps looking to take advantage of the fact that the U.S. are preoccupied with what is happening in the Middle East right now.
Well, sure. And keep in mind, so in 2017, think about when President Trump made his first official state visit to China. Think about how much diplomatic capital the Chinese delegation invested trying to impress upon President Trump that President Xi was a geopolitical equal, that China had arrived as America's most capable and confident competitor. What's striking this time around is that the Chinese delegation doesn't need to make that effort, because it is the United States, in the run-up to this meeting between the two presidents, that has acknowledged China's centrality in the international system. And in fact, beginning with the president himself, on the sidelines, or not on the sidelines, when they met in South Korea this past October, it was President Trump who said prior to their meeting, the G2, referring to an informal condominium between the United States and China, President Trump said the G2 is set to convene. So the United States this time around is acknowledging China's centrality in the international system, and just China's overall power, military, economic, diplomatic, and otherwise, has grown significantly in the intervening almost decade. So China now views itself both in terms of the leader level dynamic between the two presidents and also geopolitically between the two countries. I think that China sees itself much more confidently, much more capably, and it really does see itself on equal footing with the United States.
What about the subject of Taiwan and, clearly a very sensitive topic from China's perspective? How is that likely to feature in this upcoming summit, if at all?
It already has, and President Xi has reiterated a line that he and his top advisors have articulated on many occasions, that the greatest risk for the bilateral relationship is a conflict over Taiwan. My sense is that President Trump, based on even dating back to statements and actions from his first term, President Trump evinces very little interest in Taiwan's security. He views Taiwan as a free rider. He believes that Taiwan doesn't spend enough on its defense. He views Taiwan primarily through the lens of its chip-making capacity. Now, I don't anticipate that we will see any change in official declaratory U.S. policy on cross-strait issues. I think that the greater concern, if you're in Taiwan, is what are the informal, off-the-record concessions that President Trump might make. Just to give a couple of examples. President Trump has broken with decades of U.S. precedent by saying that future U.S. arms sales to Taiwan are up for negotiation. I can imagine President Xi saying offhand, we would like to regularize that dialogue. President Trump, again, he views Taiwan principally through the lens of chip making, and he had stopped stopovers from the president of Taiwan, William Lai. And I can imagine President Xi saying, Mr. President, I'm glad that you stopped President Lai from making a stopover. I would encourage you to do so regularly. So even if we don't see an official change in U.S. policy on cross-strait issues, if I were President Xi, I would encourage President Trump to essentially codify and regularize precedents that he's already set in his second term that would be concerning, that are concerning from Taiwan's perspective.
Ali, great to chat to you. Thank you so much for your perspectives. Ali Wyne, Senior Research and Advocacy Advisor for U.S. China Relations at the International Crisis Group. Thank you. Well, still ahead, Aldhabi Capital Senior Portfolio Manager Rashmi Garg unpacks the outlook for U.S. China ties and tells us why she thinks the rivalry between the two nations will not be transformed by a summit. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, Asian stocks and U.S. equity index futures advanced as investors bet the record-breaking rally driven by enthusiasm for the AI trade has further room to run. This comes as traders watch to see if any tech-related deals come out of President Trump's visit to Beijing. Joining us is Rashmi Garg, Senior Portfolio Manager at Aldhabi Capital. Rashmi, always good to chat to you. Why is this summit relevant for markets? Is it going to make a dent on market trajectories, do you think?
So, Jimena, I think this summit is relevant to the extent we see the trade deals coming out of it or any meaningful dialogue in terms of thawing the trade relations between China and U.S. I mean, after having said that, I would like to also sort of qualify my statement by saying these summits rarely lead to major transformations between relationships. What they can do is probably, if they're handled well, then they can make the relationship a little bit less volatile. And what is really required is an ongoing dialogue on important topics between the two premiers. So what we can expect here is some meaningful trade deals, whether it is agriculture, whether it is technology, EVs, or in terms of, in terms of rare earths. Now, U.S. would be looking for some sort of concessions on rare earth export controls, which would impact their technology markets. And from the Chinese side, they would be looking for some sort of let up on the, advanced technology chips that U.S. has instituted. So I think those would be the two important things.
One thing that I was thinking of is if you rewind back to a year ago, the same executives who are accompanying President Trump now on this trip to China are the same executives who were criticized for having business exposure in China. And here I'm specifically talking about Apple, Elon Musk with Tesla. And of course, you fast forward to today, and they're actually, in the physical presence of President Xi Jinping. What does it mean for the U.S. tech industry that they're there? How significant is it that you've got these industry leaders in China in person in terms of, the de-escalation of tensions between the two and what that could mean for further drivers of growth for these companies?
So you're very right, Jumana. I think really what is important to see here is the intent. I mean, like you rightly said, these executives were criticized for the exposure for having significant businesses in China. And the fact that now they're accompanying U.S. president on a trip to China shows that there is a change in intent. There is also a change in US's approach to China. They do recognize that it is not a China that they can dominate, or it's not a China that they can bully as well. It is, someone who is more or less on an equal footing, and they need to negotiate as equals with China. And therefore, they are willing to put on the table what is most important for them and take it from there. So I think from a technology sector perspective, this is very important, and it is an important change of tone from the U.S. regime.
Yeah, and still, if you look at the breadth in the U.S., it's still very, very narrow. It's a handful of stocks that have been leading the rally. Again, those same tech names. Do you expect that to continue, or are you going to see a broadening out of this rally in the coming months, do you think?
I would expect the tech names to dominate, and the reason for that is we ourselves are very high conviction on the AI picks and shovels trade. And the reason for that is that, we are in this once in a century kind of technological transformation that is undergoing right now, and there is real demand behind this. And if you look at, the supply, there are supply shortages, and these supply shortages cannot be made up for overnight, and which is why, these stocks are doing so well. And apart from that, if you look at the earnings from the technology companies, they have been very strong. If you look at the stocks, for example, we see an average EPS growth of 60% over the next 2 years. So this is something meaningful. something that is not to be taken lightly. Yeah. So I do expect that, the technology stocks should continue to dominate the U.S. markets.
Oh. Okay, can we ignore the inflationary impact? These numbers are creeping higher and higher, both on wholesale and on CPI, as we saw this week.
No, I don't think inflation is something that can be ignored or taken lightly or called transitory when it is not transitory, because that is a mistake that has been done in the past. I think inflation is something which is a major risk for equity investors, and they need to keep an eye on inflation. Also, given the backdrop that we have a new Fed chair, Kevin Warsh was confirmed yesterday, and we know that the expectation from Kevin Warsh, at least from Trump's side, is that he needs to lower interest rate. However, given the backdrop, that is definitely not what the market needs right now, or what macroeconomic dictates right now. So we need to see how he comes out as in his stewardship of the Federal Reserve, and how he presents himself to the press in the first FOMC press meeting. And I think these are near-term volatility events. Given the inflation backdrop, it is very important to see how Kevin Warsh reacts to this.
Yeah, absolutely. And good to bring up Kevin Warsh. Of course, he was confirmed overnight with all of the other news that hit. Rashmi Garg, Senior Portfolio Manager at Aldhabi Capital. Now for a look at some of the other stories we're following. Saudi Aramco is considering plans to raise billions of dollars from its real estate assets. Bloomberg has learned the oil giant has held early-stage discussions on a sale and leaseback transaction and is looking to raise at least $10 billion. This would allow Aramco to unlock capital while retaining use of its real estate holdings. Saudi Arabia has reported to OPEC that its crude oil production collapsed further last month to the lowest since 1990. The Iran war has blocked shipments from the Persian Gulf, causing a record drop in output from nations such as Saudi Arabia, the UAE, and Iraq. OPEC has trimmed forecasts for global oil demand growth this year to 1.2 million barrels a day, while the IEA forecast a contraction in demand of 420,000 barrels a day. Flows of crude oil and fuels through the Strait of Hormuz have fallen by nearly 6 million barrels per day in the first quarter of 2026. The U.S. Energy Information Administration, the EIA, says roughly 14.6 million barrels a day of crude oil and petroleum liquids moved through the strait in the first 3 months of the year. The increase in energy costs is also now rippling into broader indicators of inflation. Chinese firms are reportedly planning secret arms sales to Iran. The New York Times cites unnamed U.S. officials saying the plan involves sending weapons through other countries to hide the origins of the shipments. The report also says it's not clear at this stage how many, if any, arms have been shipped or to what degree Chinese officials have approved the sales. And a look at equity futures. All eyes on this summit. The conversation between the two presidents is going on as we speak right now. So they're still very much in that so-called temple of heaven, enjoying that bilateral discussion, waiting for a readout. But in the interim, we have S&P futures leaning towards positive, up 0.1%. The Nasdaq up 0.3%. European markets positively moving this morning as well, up 0.8% too. So the setup is constructive. Now, coming up, China's near total control of global rare earths will be a key topic of discussion as Presidents Trump and Xi meet in Beijing. More details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Presidents Donald Trump and Xi Jinping signal a relationship reset as the two leaders set a positive tone at the beginning of their historic summit in Beijing. They pledge for ties between the two nations to be better than ever. But beyond the handshake lies a long list of disagreements. Traveling with the U.S. president is a massive delegation that includes top U.S. CEOs to navigate trade and security tensions between the world's two largest economies. And the UK is edging closer to a bitter fight over the country's top political job. The Labour Party seems to be heading for a divisive battle as a leading cabinet member prepares to challenge the Prime Minister, Keir Starmer. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, and all eyes on that Xi-Trump summit. Abir Abu Amar is with us to break down the market reaction this morning. Abir.
Good morning, Jumana. Look, it's green across the screen this morning. U.S. futures are ticking up slightly now. They're pairing some of the earlier gains. And we've been talking about the return to the AI trade and the tech euphoria that we've been seeing that led to yet another record close in the S&P 500 yesterday. That is still the case. It manifested itself in Cisco earnings that came yesterday. Now, the stock went up as much as 19% in the post-trade, and that is because of higher than anticipated sales forecast that led to positive sentiment across the board. We turn to Asian equities, and again pairing some gains, but still in the green, 0.2% higher, fueled by a rally in South Korea's Kospi, the best equity gauge this year in the world. It was 1.7% higher earlier. It is pairing some gains, perhaps some profit taking as President Trump meets with his Chinese counterpart Xi Jinping. So we've seen that happening. Our MLife team put out an interesting note this morning about the Kospi, saying if we take out its two biggest constituents, that is Samsung and SK Hynix, its PE ratios are actually relatively in line with other indices in Asia. We turn to oil prices, not doing much this morning, 0.4% higher. Now, the Iran war has taken a back seat today, and this is because of the meeting that you mentioned between Trump and Xi Jinping today. Perhaps something they will talk about. It will be front and center, along with those wider deals that should be discussed in Beijing today, and that was discussed yesterday. And then when it comes to the yields on the 10-year notes in the U.S., ticking up slightly. We saw the CPI print that came out a couple of days ago in the United States, hotter than expected. That is having an impact, not doing much today. It led to a higher impact a couple of days ago, but 10-year yield standing at 4.7% as of now, Jumana.
Yeah, one of the big market stories, that rise in global yields. Abir Abu Amar, thank you so much. Now, as the summit between Presidents Donald Trump and Xi Jinping gets underway in Beijing, China's dominance in rare earth mineral mining and processing will be a key topic of discussion. Washington wants to avoid another shock similar to the one in April 2025, when Beijing restricted exports while reducing its dependence on the Asian nation. But for China, this has become one of the most potent geopolitical levers when negotiating on the global stage, and particularly with the U.S. For more, we are joined by Bloomberg's Heidi Stroud-Watts. Heidi, we'll talk about rare earths in a moment, but more broadly speaking, you are in China now. What is China looking to get out of this summit?
It's quite interesting. There's almost two tracks in terms of what each side wants to get out of it, right? I think we've spent quite a lot of time talking about what President Trump and the US side wants, and it's almost a trade mission. They are very much focused on those short-term deliverables that they can take home to their sort of key stakeholders, right? Whether it be agriculture, the soybean industry and the farmers, Boeing with the aerospace and the aircraft deliveries that are expected, and so on and so forth. So those are kind of the deals for President Trump as the deal maker America. When it comes to China, though, we know that the government in China, the administration, if you will, President Xi Jinping, takes a longer-term view. One of the guests we had on previously, who was with the U.S. Embassy in Beijing in previous administrations, saying that they really take that long-term view in terms of wanting stability, wanting that time to breathe, as well as they continue to consolidate their growing influence and power within what President Xi Jinping this morning in his opening remarks referred to a more and more contested world that is at a crossroads, right? He also spoke about the Thucydides trap, which is a theme that he goes to back and back again in many of these conversations. He raised that concept with President Biden as well, this idea that it's not a historical inevitability for great powers like China and the US to come to a point of conflict. So that was mentioned again. So that's a much sort of a bigger worldview, if you will, and indicates that perhaps Beijing has a bit more patience when it comes to what it wants out of this. Short term, though, in terms of those deliverables, they will be looking for some of those trade deals, but they'll also be looking for a substantiation of that draft truce, the sort of contours of a draft truce that was agreed in Busan in South Korea in October last year when it comes to the pausing of the tariffs. They'll want sort of some more meat and a longer-term agreement on that, because keep in mind, I think Beijing's also quite wary and cautious of the fact that this is a US administration in its strategy and style, and in President Trump's style tends to be quite sporadic and spontaneous, right? So they'll be wanting to get some longer-term commitments there.
Yeah, and extra points for bringing in the Thucydides trap there. You know, China, I spoke about this in the introduction, but China demonstrated last year around the time of the trade war that it actually does have strategic leverage through those export controls on rare earth minerals and magnets. Should we be expecting a deal there of some sort, perhaps a loosening of some of those export controls in exchange for the U.S. easing of tariffs?
I have no doubt that there can always be a deal that's made, and I think you know that, Jemana, as well. But the question is, what else is going to be on the table, and can the US sweeten the deal for China to be able to give further access when it comes to its enormous, as you say, dominance over the rare earths mining and processing and production globally? And what are those bargaining chips? No doubt Beijing, as we heard from the most recent remarks from President Xi, will be wanting clarity and perhaps some concessions when it comes to Taiwan. They've not been happy when it comes to the latest weapons package that was approved last year. They've not been happy with, obviously the discourse around Taiwan independence as well, and what's been happening in Iran has certainly put that in quite a different light in terms of how perhaps they're looking at an opportunity, if not for a US policy change, but perhaps some sort of off-the-cuff comment that could have impact from President Trump on this trip. You mentioned just the sheer potency, or I guess a formidable dominance that Beijing has when it comes to rare earths. And let me remind viewers, these are ingredients, sort of limited in quantities as they are required. They are really dominant in terms of being needed for aerospace, for defense, for medical tech. In fact, according to our Bloomberg intelligence analysis, around 4% of US GDP, $1.2 trillion, depending on access to these critical minerals. There has been a pause when it comes to those export controls, but Jemana, President Trump, Marco Rubio has already said they'll be wanting that to be firmed up, perhaps, to get more access as well.
Bloomberg's Heidi Stradwatz joining us live from China. Thank you so much for the overview there. Well, let's talk more about the tech angle of these discussions. The sale of U.S. semiconductors to China is believed to be a key agenda item for the summit. The talks come as both sides navigate ongoing tensions over chip export controls and access to advanced technology. For more, we're now joined by Robert Lee, Bloomberg Intelligence Senior Analyst. Good to have you with us, Robert. I mean, what do you think both sides are looking for from these talks from a pure tech perspective?
Okay, sure. I think your discussion then with Heidi touched on some of the aspects from a US perspective, because rare earths, as you discussed, are at the center of so many manufacturing and technology-related processes, from aerospace and semiconductors in particular. Also, rare earths find their way into motors, so particularly high-end motors, but motors these days are in everything from your coffee grinder to your electric toothbrush. So China has a huge amount of leverage on that front, and clearly the US is want to get some sort of agreement and certainty. But I think overall, from a Chinese perspective, they want to try to stabilize. I'm not sure you could necessarily call it a reset in relations, but they want some stability in their outlook. And again, as you touched on your outlook, on your discussion a moment ago, China takes a very long-term perspective tied into its 5-year plan and long-term strategy. So for China, access to high-end semiconductors is certainly something they want to get some certainty and agreement on. But I think the key focus from a Chinese perspective, and if you look at some of the less liquid AI-related names in the Hong Kong market, there's a stock called Jupu AI, which was up 35% yesterday in anticipation of a potential agreement on Huawei 200 chips.
Let's talk about NVIDIA. Earlier on in the show, we were talking about the fact that Jensen Huang is very notably present at these meetings. Is there an expectation that perhaps China, on their part, are going to loosen some of the restrictions to use those H200 chips?
Okay, I think to cut to the quick, is there scope for a headline agreement on H200? Will the Chinese allow the importation of this China-specific chip? Quite possibly, but it remains very difficult to forecast and predict with any degree of certainty because the whole issue is tied up with geopolitics. And obviously, if you look in the US, for example, clearly Jensen Huang is a major supporter. Why wouldn't he be? He's the CEO of the company. But equally within the Congress, there are dissenting voices. So I don't think there's a particularly clear view from America. It's quite politicized and split camp on that front. And equally from the Chinese perspective, again, going back to what I mentioned on the 5-year plan, China is pursuing self-sufficiency in technology with semiconductors at the forefront of that. So we've seen a number of AI-focused chip firms come to market in Hong Kong. I think the Chinese firms will continue to purchase local chips. That is the direction of travel on that, regardless of any headline agreement.
Rob, you're saying that they're looking for self-sufficiency in tech, and then you look at two of the big heavyweights, Tencent, Alibaba. Of note, Alibaba recording its first operating loss since 2021. Huge AI spending going on there. Some real valid questions about the monetization of all of this AI spend.
Yeah, for Alibaba, monetization is coming through, but don't forget the core of this business is e-commerce. And that's a business that remains under significant pressure, hence the very weak headline numbers they reported last night. But you have to admire the ongoing optimism of the retail investor crowd in Hong Kong. I mean, the stock in the US was up overnight because the view is amongst some sell-side analysts that the results marked a low point and things will improve from here. I think, taking a more realistic view, the jury remains out on that. Because, again, there is ongoing heavy pricing pressure and competition in e-commerce. At the same time, Alibaba is rapidly increasing its AI investment. And just to quote you one number, I think in the prior financial year, they recorded a net free cash inflow of around $10 billion US. That swung substantially negative in the year they've just recorded. So this is putting huge pressure on their margins, this investment spend, massive pressure on their free cash flow generation. While some revenue generation is coming in, the overall return or return on investment is still considerably low. So I think taking a more balanced view or whatever, it still is down for these companies to demonstrate a sustainable and more meaningful return on their investment. We are yet to see that. I think that remains some way in the future.
Okay, Robert Lee, Bloomberg Intelligence Senior Analyst, thank you so much. And also, just of note, while Robert was speaking, CCTV, a Chinese state television, reporting that the meeting has now ended, that bilateral between President Trump and President Xi, also reporting that Xi will go on to meet U.S. business leaders and executives. And so we know now that the bilateral summit has come to an end, waiting for more commentary and a readout from what went down there. Now, coming up, UK Prime Minister Keir Starmer looks set to face a leadership challenge from Health Secretary Wes Streeting. The latest details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The UK's Labour Party is heading towards a divisive battle over the country's top political office. Bloomberg's been told that UK Health Secretary Wes Streeting is planning to challenge Prime Minister Keir Starmer as party leader. Streeting's backers say he's likely to quit his cabinet post this week to launch his leadership bid, while Starmer's supporters say he will fight any attempt to replace him. A leadership contest could drag on for months at a time when the UK faces weak growth, soft employment and rising inflation. For more, we are joined by Bloomberg's Rosalind Matheson. Well, yesterday, Ros, we were talking about the number of, or the handful of people that could be up for a leadership contest, and it seems as though Wes Streeting is front and center right now. How could the events over the next few days unfold?
Well, as you were just saying, we're expecting that Wes Streeting is gearing up to launch a leadership challenge against Keir Starmer. So the first thing is he'd probably step aside from his ministerial post. But there's a whole lot of steps that have to go through here and quite a protracted process in terms of the Labour Party leadership. So first of all, Wes Streeting needs to get enough nominations from his fellow MPs, 81, to launch the leadership challenge. Then after a period, there has to be a vote within the Labour MP group themselves. And after that, it has to go out to the paid-up members of the Labour Party in the UK. So there's a lot of campaigning that goes on in between all of that for a final decision. And of course, Keir Starmer has made it clear he's not going to just step aside if a leadership challenge is announced against him. He's going to contest that leadership and he's going to stand his ground. So that's going to make it very messy and very protracted, as you were just saying. It could, in fact, go on for some months. And of course, the big question is, do you get other contenders who come out of the woodwork and make this a very big field indeed?
Yeah, I mean, the other thing that's not completely out of the realm of possibilities is there is a leadership contest and the Prime Minister actually manages to stay in his post. I mean, with all of this going on in the background, what does it actually mean for UK markets, this uncertainty about leadership prospects?
Well, that's right. And of course, it's not without precedent because there was a former Labour Prime Minister, Jeremy Corbyn, who went through a very brutal leadership challenge and yet hung on for a few years after that, arguably, of course, weakened through that process. And the question is, even if he does survive a leadership challenge, as you say, an election is 3 years away, but this gives the opposition just that ammunition to keep coming back and saying the government is distracted, using that word a lot already, distracted, at a time when they can't afford to be, at a time when markets are clearly concerned about the economic outlook for the UK. You've got employment an issue, you've got inflation rising because of the conflict in the Middle East. You know, fundamental questions about the place of the UK in the world. We've got two big conflicts still going on, Russia in Ukraine, the conflict in the Middle East, an energy crisis, and big questions around the UK's place and all of that and how they're going to develop AI, business of AI. So a lot of things on the plate. And Keir Starmer was hoping to clear the decks and get his legislative agenda back on track, the focus on what he's trying to do. All of this will derail that. So even if he does survive that leadership challenge that we're expecting to come, the question is he going to be weaker in the future and, you know, leading the Labour Party into the next election?
Ros, thank you so much for the overview. Again, let's see what happens today throughout the course of the day and never a dull day in UK politics. Rosalind Matheson. Now for a look at some of the other stories we're following. The UAE has denied Israeli Prime Minister Benjamin Netanyahu had visited the country. Abu Dhabi says its relations with Israel are public and conducted within the framework of the Abraham Accords. The UAE also denied receiving any Israeli military delegation. Lebanon and Israel are set to hold new peace talks in Washington starting today as their latest ceasefire nears its end. The two countries last met last month at the White House, where President Trump announced a 3-week ceasefire extension. But Israel has vowed to keep pursuing attacks against Hezbollah despite the truce. Coming up, the fallout from the Iran conflict is now hitting some of the world's most vulnerable farmers in Africa. That story next. This is Bloomberg. Well, just getting some headlines now from that Trump-Xi summit, and CCTV reporting that President Xi has said that he welcomes U.S. Desire to enhance cooperation with China. U.S. firms will have a better future in China, and also adds China's doors will open more. So this is specifically some of the comments that are coming through, and we know that he is meeting with U.S. business executives as well, just coming on the heels of that bilateral summit with Trump alongside key members of the cabinet. But essentially, Xi is welcoming U.S. industries right now and saying that China's doors will open more. Now, the fallout from the Iran conflict is hitting some of the world's most vulnerable farmers in Africa. In countries like Malawi, rising fuel costs and fertilizer shortages are threatening food security and raising fears over future harvests. Bloomberg Africa reporter Anthony Squazin joins us now. So, Anthony, talk to us about how severe the impact is on farmers in countries like Malawi right now.
Thanks. Yes. It depends on which country it is and where the planting season is. And Malawi is an extreme example because it's landlocked, it's quite impoverished, and it's right at the end of supply lines. And it gets 3/5 of its nitrogen-bearing fertilizer from the Gulf. So there are big concerns there that there won't be enough fertilizer for the upcoming planting season, and that could spur food inflation and food insecurity, and possibly, leaving a lot of people, millions of people hungry later this year, early next year.
Yeah, is there anything that farmers are doing to cope? Are they cutting back on planting? Are they switching inputs?
Well, it's a variety of different strategies. I think commercial farmers are cutting back on planting. In South Africa, we're now expecting the smallest wheat harvest in 12 years because planting is going on as we speak. And that's due to rising diesel prices and higher fertilizer prices. So they have to, basically work within their budgets. Elsewhere on the continent, what we're seeing is good quality fertilizer being blended with poor quality fertilizer, and that's being applied to crops instead, which is very harmful because it means the yields will be lower. So that will also decrease harvests in a few months' time. And what we will see is more food insecurity. It's not just Malawi, it's across the entire continent, and it's a whole range of different crops.
What does this mean for food security across Africa in the coming months?
Well, it depends where you look at it. In West Africa, we're planting at the moment. So food insecurity could come to bear quite soon, 3 or 4 months' time. In places like Malawi and Southern Africa and Eastern Africa, we're more likely to see food insecurity early next year when the harvest starts coming in. There was a good harvest in the season just past, so that should tide people through for a few months. But we're expecting fertilizer shortages, higher diesel prices, and there's also talk of an El Nino drought. So it's likely to be a very difficult 12 months ahead for farmers across the southern and eastern regions of the continent.
Anthony Squazin, thank you so much, Bloomberg's Africa reporter. All right, I just want to bring you a couple of lines that are coming through once again from President Xi, and he's saying that China's doors will open more. He's saying U.S. firms will have a better future in China, and welcomes the U.S.'s desire to enhance cooperation with China. So this is just some of the commentary that's coming through from this very high-level summit that's taking place as we speak right now in China. That is it for our show, Horizons Middle East and Africa. Stay with the channel. Daybreak Europe is coming up next. This is Bloomberg.